Welcome to the Transparent FX Academy. I'm Nick and I'm a top plotter in TradingView with over 190k reputation points. And in this video, we will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be analyzing the pair from a technical perspective, then we will go and see what we have when it comes to the order flow, so the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. So without wasting any more time, let's jump straight to the charts. Okay, so in this video, I will be speaking about EURNZD because it's definitely time for an update. Now, starting here from the monthly time frame, what do we see? Now, here in the monthly, we consider the market just created a very strong impulse to the downside. Now, in general, if you have an impulse and you want to measure potential areas of support and resistance, what you have to do is take your Fibonacci on the previous leg. Now, in this case, the previous leg is from this high to this low. And if we do that, what we can see is that at the moment, the market is testing exactly the minus 0.272 of the Fibonacci taken on the previous leg, which in this case is acting as support. We can see how the market tested it here and started rejecting it to the upside. At the moment, we're testing this exact same zone from which we do expect a potential rejection higher. Dropping down on the weekly time frame, what do we see? Now, here on the weekly, we can see how the market created a very strong impulse. Currently, it is overextended to the downside and is creating this deceleration. Now, after the creation of a deceleration, what we expect is for the market to provide a correction. Specifically, we would like to see the market provide a correction at least to the 0.32 of the Fibonacci taken on the impulse leg, which in this case would be the zone that is around this area here. So what we expect is for the market to provide a potential correction to this area as a first upside target from a weekly perspective. Dropping down the daily time frame, what do we see? Now here on the daily, we can see that we have a completely different scenario. In fact, what we had was a market which was pushing to the upside. Now, when the market was pushing to the upside, we spoke about the fact that if the market would have successfully managed to close from a daily closing perspective above this previous support and resistance, this previous support and resistance would once again be turned support. And in that case, we could expect a retest and continuation to the upside. But the market, instead of closing from a daily closing perspective above the resistance, created a move back down. Sellers protected this area as resistance, and in fact, the daily close was below this previous support and resistance. Therefore, this zone remained resistance, and the market in fact respected it as such, creating this rejection to the downside. However, in creating this rejection to the downside, the market has also printed a bullish pattern, which is this overextended M pattern. Now, in general, after the creation of an overextended M pattern, what you want to see is the market create a move to the upside to go and retrace at least to the 0.32 of the Fibonacci taken on the impulse leg. So in this case, from this high here to this low. So what we expect here from a daily perspective is for the market to provide a correction at least to the 0.32 of the Fibonacci taken on the daily impulse. Now, if we go and see what we have when it comes to the COT data, so the commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing, and we check the data for the euro, what we can see is that in the long term, net positions are getting decreased. We went from having 64k to having 21k net positions. However, in the short term, we are seeing an increase of the net positions, and in general, we are not seeing shorts getting added. In fact, it is now already 3 reports in a row that we see shorts getting closed, specifically thousands of shorts getting closed. With the last report, in fact, we had 4.5k shorts closed. In fact, we currently also still have more longs than shorts, with 200k longs compared to only 178k shorts from an institutional perspective. So on the euro, we could definitely see some strength for the potential move to the upside. If we go and see what we have on the NZD, we can see the NZD getting stronger from minus 14K to minus 800 net positions in the long term. However, we also see a decrease of the net positioning in the short term, going from a positive net positioning to a negative net positioning, with 1.7K shorts added with the last report and 1.6K longs getting closed, meaning that the NZD in the short term could definitely be weak. And a weak NZD and a strong euro is exactly what we need if we are to create this short-term correction to complete the overextended M pattern, at least at the 0.32 of the Fibonacci taken on the daily impulse. So there is a potential short-term longing opportunity here. Now, how we could be approaching that? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market, and only if the market would shift from an intraday bearish environment to a bullish environment and provide to us one of our valid entries, only at that point we could be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to retrace at least to the 0.32 of the Fibonacci taken on this daily impulse as a first upside target. Now, if you don't know what I'm speaking about when I say market environment shift and valid entries, that is all part of the mentorship program, which you can access now completely for free. The link, in fact, is in the description, and I really suggest that you go and check it out. Now, if you enjoyed this video, make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you, because obviously it helps with the YouTube algorithm, and I will see you in my next video.